Hi, my name is Todd with Fireball Financial. Today's topic, what is about to happen? I'm going to make a very rare but bold and specific prediction about a day in the future. Today is Tuesday, October 30th, 2018, and this Friday will be November 2nd, 2018. On that day, Friday, we will see the largest one-day stock market decline since Black Monday in October 1987, 31 years ago. I've been preparing for this day for 3 weeks, maybe in fact since around February this year, because of what I see happening in the news and in politics this year. Without taking a side, what I'm about to say is based on observations, not so much my opinions, and I've shared my prediction with some of my own family. I'm not looking for a lot of YouTube views until after the event, but I feel like I need this information recorded and published with a date to confirm that, yes, it was a prediction. And why? There's a battle going on in politics and in the news media for the opinion of voters this year. President Trump has taken nearly every opportunity to proclaim his victories to the frustration of the media, and the media has taken every opportunity they can to refute any of the president's claims. I first took particular note of how this could affect the stock market after the State of the Union address back in the winter. When one day the Dow was at a new high and the president states so, and then the very next day, it begins a sell-off unmatched since about 2011, 7 years ago. The market makes an attempt to recover, then sells off again, and then does fairly well the rest of the summer, goes on to new highs in August and September. I'm not watching the financial news, just top-of-the-hour radio news and my own investment performance. When, back in late September, I realized that my aggressive growth investments went down in value by nearly 25%, I looked closer to see if that might continue. When it seemed likely, I made the move to short the market with inverted ETFs, making it profitable for my investments if the market continued to decline. Because this is a very risky tactic, I also made sure to protect my short ETF investments with protected puts. But now, 3 or 4 weeks later, it seems I had little to fear, and there's just 3 days left to go. So what did I see? There are things happening that make investors nervous. First, while it's true that no one wants to see losses, it's almost as bad and probably even scarier to see volatility, prices going both up and down wildly. This is especially bad because the overall trend is usually downward, and stocks usually end up at a lower price when the volatility settles down. Also, long stock market climbs like we've had seem to have opposite effects on different investors. Some forget that stock prices can and do decline, and so they try to keep buying the new bargains, which drives prices temporarily back up, while other more sensible people grow increasingly nervous of a crash and look for signs that they should head for the exits. People seem to be doing that now after a run-up since 2008, and there was only really a brief break in the middle of that, in the middle of 2011. And third, interest rates aren't very inviting yet, but they are better than they have been for the last 10 years. This gives frightened investors a reasonable alternative to stocks. So what could be causing this terrible volatility? Now we have to look at the motivations and resources. The opponents of the president do include what I call billionaire Democrats who've been funding campaigns against him really with little success, but who still have billions available to them. They see the midterm elections as do or die for the next 2 years and just might be willing to lose a little money in the stock market, maybe looking at it even as just another way to finance their campaign and their influence. They know the mainstream media will jump all over the story if the great economic news has a blemish like a market correction just before the elections. If they can sell enough stocks to trigger a broader sell-off on Friday, the weekend news will really not be good for the president. But can this really happen? To answer that question, let me give you a brief lesson on how stock prices are actually determined. There isn't a little wizard guy sitting behind a curtain saying, $20. Okay, now $21. Whoa, wait, now $19. The prices are determined by four groups of people. There are two groups of buyers and two groups of sellers. On the buyer side, there are buyers who will only take a certain price and buyers who will pay whatever price is offered. And the same is for sellers. These differences are called limit orders and market orders. In order for there to be a stock to buy, someone has to want to sell it. So in my first example here, a guy who bought a stock for $10 now wants to sell it for $15. He places a limit order to do that. If no one wants to pay $15, it won't sell. But say someone else comes along and just wants to buy the stock. This guy places a market order and therefore gets it for $15. Done deal. For my example number two, these same two orders are placed, but before the market order comes in, a second seller asks for only $14 for his stock. He beats the first seller's $15 price, so that's the price that the market buyer gets, $14. When there are a lot of buyers, they buy up all the lowest price limit orders from sellers, so the next price is higher. More sellers can add more stocks for sale at the lower price, but eventually enough buyers will buy everything at one price and leave only higher priced stocks. This will actually get the attention of stock owners and encourage them to sell because suddenly they can get a higher price. But the opposite happens when there are a lot of sellers. When all the buyers have bought, they have less money available and cannot keep buying. So prices fall. Falling prices attract more sellers who fear falling prices and try to get out before the prices fall further. You can imagine how hard it is to be a motivated buyer when the market is plummeting and selling precipitously. Prices can fall much faster than they can climb. Some stocks don't sell every day, but only occasionally. These would be low volume stocks. But other stocks sell hundreds or even thousands of shares every minute. And so the orders, both limit and market orders, happen in such a flurry that it's a miracle that the computers can keep up. Most of the time, buyers and sellers are pretty evenly matched. The stock market climbs because there are a few more buyers and declines when there are a few more sellers. What I think is about to happen, and really has seems like it's already been happening, is that a group of sellers who are motivated not by making a profit and not by needing the money to buy something, but purely motivated to create a news event. They've been selling stocks on some days and forcing the market down. Then the next day they trickle in and buy some of it back. It gives them something to sell again the next day. And this helps the market recover a little, but they leave it lower than they started. This may be the source of some of the volatility we've seen. Of course, there have also been some giant companies in the news with basically bad news. Social media companies have been under congressional investigation. There's a shoe company running ads that probably will result in the loss of some customers. There's even a company that's been penalized because the owner said he wanted to buy back the outstanding shares, take it private again. That kind of news can't be legally announced just willy-nilly because of the turmoil it causes in stock prices, in that stock price. All this news just increases the volatility and adds to the chances that I'm right about Friday. Anyway, if that group of sellers is big enough and causes a bad enough day on Friday, other frightened investors will join the sell-off, and it just happens. The markets and the Securities and Exchange Commission can try to limit the damage. They can negate some transactions. They can warn market manipulators about penalties. They can even come in and halt trading altogether. But if this happens, the news about any of these actions is also bad news for the market and would just play right into the overall strategy of creating bad news for the election. I hope something like this doesn't happen again for another 30 or more years, but just like when a big war breaks out, you can be against the war, but is it really responsible to not invest and make a profit from the military suppliers? That's your judgment call. If I'm right about this, it'll be obvious by the time you probably see this video, and I'll be a bit wealthier for acting on my prediction. But I'm not a financial advisor, and I'm certainly not your financial advisor, so don't take any of this as advice. It's just something that I'm sharing, something that I wanted my family and my kids to know, and you are welcome to suffer through the entertainment value. I'll be posting some more videos, some on financials, and I'm also a tech geek and into computer programming. My wife's been making some videos on family, faith, fitness, and fingernails. Somewhere in there, we'll reveal the true reason why we've chosen Fireball for our brand. If you wouldn't mind, try subscribing. I'll talk with you again soon.